I think the key thing we need to do is keep track of the virus track here, because we have a situation in which an extended cycle in the U.S. where U.S. data is actually coming out relatively well is potentially being impacted by this virus. So we need to watch closely, and I think we have some good signs here. You pointed overnight to some confusion around the confirmed cases, but we do see a trend down in confirmed cases in China. So I think what's important now is to continue what's happening in China as well as outside China, where we are seeing continued growth of the virus, but we'll track that very carefully.
As we take a look at the impacts, certainly in the macro markets that are being felt, it seems as though stocks, at least in the U.S., are shaking this whole thing off.
Yeah.
But you're seeing it in the oil market, and you're seeing it in treasuries and government bonds in developed markets like in Europe. So what exactly does this now mean? Which do we believe about the coronavirus and its effects on the overall economy?
Well, I think they're actually very consistent, because in our view, what's happening here is the U.S. economy, without the viral risk, is in an extended cycle, which should be relatively good for asset markets. We know the Fed is easy. We know policymakers are easy. And with steady growth, that's supportive for the equity market. And you're seeing that. And I think global investors are coming to the U.S. for that. On the other hand, interest rates are being kept low by this risk and by the easy policy. So we know that given all these risks, central banks are likely to be more easy than tight. So that's keeping rates low.
Is the U.S.'s status, I've heard it a lot over the course of the past several months now, safe haven, even calling the stock market a safe haven, at least in the United States. Is the U.S. market justified in having that moniker, that identification as being a safe haven, even if it's in things like equities?
Well, it does I think it is justified. It's justified because, one, growth looks relatively good compared to elsewhere in the world, other developed markets. So you're seeing, if you want to get growth, the U.S. is a good place to go. So investors who are looking for growth are coming to the U.S. For growth. I think the other place that we should watch, though, carefully is the dollar. Right. So the dollar has started to rally against most developed currencies, and many dollar indices are approaching their highs. I think if the dollar stabilizes around here, that will continue to support this exceptionalism view. But what might be worries if the dollar accelerates to the upside, because typically when the dollar accelerates to the upside, it's associated with a sort of tightening of global financial conditions. So that's one of the market risks that we would look at very carefully here to see how this balances out.